Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, we're going to talk about gold and silver and also some big picture comments that I think are arguably some of the most important to understand for precious metals investors. First things first, though, let's talk about this. Let's call it a rally in gold, I guess. Gold seems to have put in at least a short-term bottom around that 1750 level, and over the last about week, little longer than a week, gold has rebounded, but it's been a pretty slow rebound. Sorry, it's been over about 4 or 5 weeks. I thought I was looking at the daily chart. Turns out I'm looking at the weekly chart, and this rebound, boy oh boy, that's a slow rebound, especially when it comes to a weekly chart and gold rebounding, let's say $80 in 4 to 5 weeks. What's your takeaway, Jordan, from this rebound in gold? But honestly, this rebound really hasn't gone anywhere.
Yeah, Corey. Unfortunately, it's a textbook weak rally. I mean, the market is in a larger correction. You could say it's a bearish trend. I mean, it's a significant correction because it's been going on for a year. It got oversold in recent weeks and recent days. And when the market rallies and it's weak, you see gold outperforming silver and the gold stocks, basically. Because if you're in a healthy market, you see a rebound. The gold stocks and silver outperform gold if it's a really healthy rally. And we're seeing the opposite of that. And it's not just, I mean, you can look, you can see that happening for like a week or so, and maybe it's negative, but then after a little while, then you see some real strong outperformance from the other parts of the sector. But as you noted, gold has already rallied $80, and it's just looking at GDX and GDXJ. I mean, they really have not done that much. I'm just looking at them on my screen. I mean, yeah, it's possible that they could rally a little bit more, and maybe we'll see some buying come in just because gold has rallied so nicely. But again, gold's already rallied, and GDX and GDXJ have barely moved. I mean, if these are bottoms, they're still carving them out. And silver has basically just gone sideways. It's in a bearish flag. So the action in the sector, unfortunately, it has negative implications. Now, I'm not saying tomorrow it's all going to break down because the miners are still oversold. Gold could still have a little bit more upside here. So it's possible some more buying could come in and we see a little bit more of a move in the miners, maybe even silver. But if we just step back, it just, the implications are not good for the sector.
Yeah, the lack of movement in the stocks, really across the board when it comes to gold stocks, that is concerning because even when we had a couple, let's say even $20 spikes in gold, we weren't seeing any movement in the gold stocks, and that's always a concern. We've also seen volume really decrease in a lot of these stocks. Now, you mentioned silver there, Jordan, and a potential bearish flag that it's forming. I'm assuming that's on the really short-term charts because of that recent drop silver had back in the middle of June. Because you look at the big picture going back to the middle tail end of 2020, that peak that silver had right around $30, it's still right in the middle of this range, but I guess more short term you're looking at that bearish flag.
Yeah, I mean, big picture, silver has held up really, really well during the correction. It's outperformed gold. And look, silver, as I've said before, silver could go down and test 22, and that would be the 38% retracement of the huge move higher in 2020, albeit short in terms of time. And so there's a lot of support. I want to say it in the low 20s. I mean, 22. I think the 400-day moving average is around 23. So I would not be surprised if silver tests 22, 23 at some point. I mean, I know that we'll get into the macro a little bit later, but it's something we talked about. I want to say two or 3 weeks ago, was looking at how just the inflation aspect of the market, the inflation trade had peaked and it shifted. Rates or bond yields are moving lower, and so in that type of environment, you see gold will outperform silver, and so that's what we've seen in recent days. So I mean, they're there has to be a lot of nuance to the view in silver because it's held up really, really well. It's still far from even retesting that 38% retracement. But at the same time, if we look at kind of the macro market picture in the short term, that tells you that silver is probably going to underperform moving forward. So it'll be really interesting to see. I mean, if we do see silver come down, I'm thinking ahead here, but if we do see silver come down to 22, 23, and then it makes a really strong rebound, that would be very encouraging for the whole sector. But here and now, it just, the short-term outlook is not good. I think there's a lot of risk it could dump below that bear flag at some point in the next couple of weeks or month or two.
So what's the lower target then? Because the one encouraging aspect about this range that silver's been trading in is higher lows, consistently higher lows. But if we get a dump right here, that means that trend is broken.
Well, I mean, not necessarily. I know that if you're looking at, I'm not a huge fan of trend lines, so I know that there is, you can do a trend line in silver, I think, from November, if you connect the November and then the March low. So there is a risk that silver is going to break below that trend line. But, I don't know where the trend line comes in. I mean, look at maybe it's around 25. So, I mean, it doesn't. So, yeah, if silver breaks that and it breaks this bear flag, yeah, there's a risk going to go to 22 to 23. But if you step back and look at a 1 or 2 year chart, you can see that the larger consolidation, the initial lows were at 22. I mean, after the beginning of the correction at the end of last summer. So yeah, silver coming back and testing 22 or 23 again, that's just in the context of a larger bullish consolidation. So yeah, breaking below that trend line doesn't concern me. People have to be careful with trend lines. I just think they get used way too liberally, and I'm not a huge fan of them. So yeah, I mean the silver stocks are already underperforming. They're already lagging. As we said, silver and the gold stocks are lagging. So I mean that's telling you what's likely to happen here in the short term anyway. You don't need to wait for silver to break this 6 or 8 month trend line.
Yeah, unfortunately, again, it all comes back to the stocks, right? And stocks underperforming. Jordan, big picture then, and I think this is one of the most important aspects, is we're seeing high inflation data, low interest rates, but gold, silver, they're not moving. I thought that negative real rates were supposed to be one of the largest, if not the best drivers for the precious metals, especially because we're seeing this jump in inflation and actual inflation data. A lot of the gold bugs were complaining that, look, we see inflation, but the data just doesn't judge it. Now the data is actually showing us that inflation is here, but somehow the Fed and other market movers, I guess, have been able to talk everybody into this whole transitory nature of inflation. Either way, you would think in an environment where the data is pointing in this direction, precious metals should be getting much more of a bid. What's the disconnect here in your eyes?
Well, you've heard me say this, and listeners have as well. The market looks ahead. The market looks 6 to 9 months ahead. And in the market's eyes, I hate to use the T word, but in the market's eyes, this pop that we're seeing in inflation is going to be transitory. And the market also focuses on, not only does it focus on the near future, but it focuses on what's the direction of the trend as far as what we're looking at, various economic data. So over the next 6 to 9 months, the market thinks that inflation is going lower. The rate of inflation, the rate of change is going to be lower. So yeah, we know that based on the spike in inflation, real rates have become deeply negative, but the market is looking forward over the next 6 to 9 months and is concluding, yeah, inflation still might be relatively high to the past, but it's probably going to be lower than, what we just saw recently. So that explains the disconnect. The market is anticipating that the rate of inflation has peaked. And that's why we see, the action of the bond market where bond yields have come down considerably. That's why we now see the gold silver ratio. Silver was outperforming gold. Now gold has been outperforming silver. Gold is correcting. The gold stocks have taken a hit as inflation expectations have peaked. So that, I mean, that's really the question going forward. I mean, for the rest of this year, I mean, it's already obvious, but as we're looking into 2022, that's the question for that year. I mean, inflation, will it continue to moderate, or will it, um, rebound and kind of stay around these higher levels? And I mean, if it does the latter, then you'll see another leg higher in precious metals and commodities. But here and now, looking forward for the rest of this year, the market is saying, inflation has peaked, the rate of change is going to move lower, and that's what they're focused on for the time being. So, I mean, all the news, the pop in inflation, it's already been priced in. That's why you have these massive moves in commodities. Silver went up to $30. Gold, albeit it was a year ago, up to nearly 2,100. All this news that's coming out, it's already been priced in. You always have to focus on the near future, 6 to 9 months ahead, and what the market is looking at. I mean, the majority of news that you get, it's not telling you anything new.
That is, I guess, true. Yeah, this inflation spike has been expected. And look, again, everyone's saying that this inflation is not going to last. How long can the market keep on saying that then, Jordan? You're saying the expectations to the end of the year that inflation is going to, or has already peaked, a few more months of higher inflation, even through the rest of this year. You think the market still digests it fairly reasonably like it has?
Yes, I just think if you look at the market, that's what it's telling us right now. And you also see, I mean, if we're talking about like relative charts, I mean, gold has really badly underperformed the stock market again. I mean, it's really disappointing that that's happened over the last 12 months. So if you look at those things, I mean, the market is saying inflation has peaked, the rate of change is going to be lower, and that's why we see capital coming back into tech stocks. They tend to do well when bond yields are coming down or low. Um, that's just the read that the market has. And obviously, month to month, we'll get new data, markets will adjust, and we'll have to continually evaluate the potential adjustments that the market will make along the way. And that's why I mentioned before, the real question will be 2022. Are we going to see, will the rate of inflation remain relatively high, or will it come down considerably? So I think that's the question moving forward. And I mean, the markets and the technicals, they are where they are. And gold is broken. I mean, big picture view, it's building this handle on a cup and handle. But as I said, I mean, the handle, we're about 1 year in. I mean, that can last 2 years, 3 years. So it's just with the way that gold is looking, there's nothing here that's telling us it's going to break out in 3 or 6 months. It's going to take more time. And maybe that means it's going to take more time for this inflation to moderate, and then for something to happen, and then inflation expectations will rise again, and then we'll have stagflation. I mean, that's just a guess, but that's how I'm interpreting the message of the market right now.
Ah, okay. So that's interesting. And who knows? Yes, you could be right that we need a little slowdown in inflation, and then another bump, right? Because it really does seem like this inflation data that's coming out, even when it does surprise to the upside, the market's ignoring it. And even the statements that we're hearing from Jay Powell, he's also saying that they still think it's transitory. So until we see a change in just those expectations or anything that the Fed does, yeah, maybe we are still stuck in the summer doldrums. That's also another consideration. We are in the middle of summer here, and boy, oh boy, I think everyone forgot about just how boring summer can be for precious metals markets, and here we are again. Jordan, thank you, as always, for your time. I appreciate your comments, buddy. I'll post a link to your website, The Daily Gold, and we'll chat again next week. Thanks for your time, Jordan. Have a great rest of your week.